Hello everyone, welcome to yet another video from Alpha CQ. I'm sure that you guys might have come across terms like investing and trading. These are the common terms which people use while they are discussing about stock market. Like most of the time what happens is people get confused with investing and trading. So here we have come up with this video where we'll be discussing about investing and trading and also let you know guys how they are different from each other. So let's get started. So let's start with what is investing. So definition says that committing your money on any of the asset class in hope of creating wealth over a long period of time. So you can see that here there are four important points which you need to observe. Like committing your money. So that is the first thing which you have to observe here. Next is the asset class. So asset class refers to the avenues where you can invest, like where you can invest your money. Some of the common asset class is real estate is one of the asset class, equity is one asset class, gold is asset class. So it is nothing but the different instruments on which you can make your investment. Next comes creating wealth. It is nothing but the objective of investment. Like even if someone is asking you why you are investing, there should be one answer why you are investing. So creating wealth should be the primary objective of investment. So next comes long period of time. As the definition says that you can see investing is all about holding it for some period of time, at least 5 years or 10 years. You believe that it is believed that wealth creation is not happening over small period of time. It takes some time to build your wealth. So to make this definition simpler, let's take an example. So imagine that you have 10 lakh amount with you today and you want to invest it somewhere. So imagine that you want to invest in real estate. So what you do is you identify a plot which has a potential to grow. Like the value of today might be 10 lakhs, but you believe that it has a potential to grow to 20 lakhs or 30 lakhs in near future, like 5 years down the line. So what you do, you buy that plot for 10 lakhs today in expecting of a growth to 20 lakhs or 30 lakhs in near future. So you can see that in example we have covered committing money as well. Asset class is real estate, what we have selected in our example. Creating wealth, the 20 lakhs or 30 lakhs what you earn 5 years down the line is the wealth which you are creating by investing that 10 lakhs. So long period of time. Here in this example we saw that it is a 5 years time. So the time can differ based on the asset class as well. So the same thing happens in stock market as well. So people identify companies which are having potential to grow in near future. Like the business run by that particular company has potential to grow. So what people do is they buy stock of that particular company and hold it with them to certain period of time till the company is making good progress and earning good profits. So along with the profits made by the company, the value of stock also grows. So in that way, money invested in that stock will help them create wealth. So this is how investing works. So next let's see what trading is about. So trading is all about buying and selling with the same asset class with the intention of making profits over short period of time. So you can see that how trading is different from investment. Like here you are buying and selling with the intention of profit, but here there is the main objective is profits but not creating wealth. And trading is all about that happens within very short period of time. Like you buy today, you sell tomorrow. Like what happens in stock market is people see good potential opportunities in that particular stock and they buy it in the morning and they sell it in the afternoon once they make some good profit. So that is how trading works. So that was trading for you. So next important question what we need to answer is what are the main differences between investing and trading and what are the parameters which make them different. So let's get started. So the first important factor which differentiate investment from trading is time period. So we saw that investment is done for a very long term. Like you cannot expect wealth to grow in 15 days or 1 month. So it takes its own time to grow. So as like a business, if you start business today, it might take 2 years or 3 years to know the value and to grow to some extent. That is how investment works. But trading is not that way. Trading you see profits very short term. Like Like I gave you an example of a trader who buys stock in the morning and sells in the afternoon to make some short profits with the movement. So that was the first factor which makes investment different from trading. So next comes the risk factor. So you can see that the risk involved in investment is comparatively low because you are giving your investments time here. So the more time you give to the investment, the lesser will be the risk. So that is for you. In investments, the risk is low. But when it comes to trading, it is very risky. You might have heard people saying that don't trade in options or don't trade in futures. They are very risky. Yeah, why it is risky? Because they are exposed to the short-term fluctuations like ups and downs. There will be a lot of volatility, ups and downs. That's why people say trading is very risky. So risk is the second factor which makes two of the things different. Third thing is the way we approach them. So in investing, what we do is we use analysis called fundamental technique to analyze the stocks or things. So if you guys are wondering what fundamental analysis is and what technical analysis is, don't worry. We are planning to come up with videos where we'll be discussing about these topics in detail. So to brief you about what fundamental analysis is, it is nothing but reading of the statements. Like you might have heard about balance sheet reading. So that is one of the important technique of fundamental analysis. So fundamental analysis is all about reading statements, analyzing how company is doing, identifying what is the potential of that particular company in future. So that comes under fundamental analysis. So in trading, what happens is most of the time decisions are taken based on the technical analysis. So technical analysis is used to analyze the trends and price pattern observation, etc. So don't worry about all those things. Just keep in mind that investment is done using fundamental analysis, whereas traders use or trading is done using technical analysis. That was the third difference for you. So let's get into the next difference. So outlook is the next difference. So outlook is your perspectives. So what happens in the investment is you do not change your outlook very often. Like you believe that company is doing good or has the potential to grow in future. You believe in that idea for long term, like 1 year, at least 2 years. You give more time to your view here. So the outlook in investing will not change. Whereas in trading, you need to be very flexible. The outlooks will be changing very frequently. Like take an example of trader who was very negative on the markets while opening. That means he is expecting prices to go down. But the same trader can change his outlook to positive in the second half of the trading because it is very short term. So anything can happen over a short period of time. So that is the fourth difference. Outlook in investment remains constant or it will not change very frequently. Whereas in trading, the outlook will be flexible and it changes very frequently. The last point which makes investment different from trading is about the objective. So it is the most important thing we have to observe here. So why people invest? So what is the objective of investment? Like capital growth, most of the time capital growth is the objective with what people start investing. So capital growth is you are not expecting your money to grow rapidly. Like you are giving it enough time to grow. Along with the capital, there is some growth in your business as well. So that is with investing. But whereas it comes to trading, primary objective is not capital growth. The primary objective here is to earn the profits. So they want to earn profits in very short term. So there is no importance of growth here. If they want quick money here, that is trading. So these are the main points which makes difference between investing and trading. So let's see what is the next question. So the next important questions what will arise is what you should be doing, like what we should be doing, whether we should be investing or whether we should be trading. Can we do both? These are this is very crucial questions we need to be answered. So let's stop it here. So let's come back in next video where we'll be discussing factors which influence our decision on what we should be doing. Hope this discussion helped you in understanding about investing and trading. Thank you.